Hello, my name's Craig Earl, I'm market analyst at ALPARI UK, and welcome to today's daily market update. There's been pretty quiet in the markets this morning. We're just going to have a look at some of the major stories that are moving some of the markets early on, and that starts with the US corporate earnings. Obviously, last night we saw Alcoa kick it all off, announcing a loss for a second consecutive quarter. The earnings per share was slightly higher than expected, though. We were expecting an earnings per share of around 1 cent. This actually came in at 3 cents, so slightly improved, but still pretty low. We were expecting this. There has been a lot of impact on this company over the last few months, so we were expecting a loss for a second consecutive quarter, as I say, and a low earnings per share. So this hasn't come as too much of a surprise. And again, this morning we've also seen Costco report. Now they've reported an earnings per share of $1.39. We were expecting an earnings per share of $1.31. Well, again, this is slightly high, but again, it hasn't had too much of an impact on the markets yet. There has been a lot of pessimism surrounding the markets recently with regards to these corporate earnings, a lot of profit warnings over the last few months. So I don't really think we're going to get too carried away with the fact that these companies have slightly beat expectations, because over the next few weeks, I do think we're going to see earnings coming a lot lower than we have seen over the last few quarters. Also, we've heard from the IMF again overnight. We've heard again from the IMF overnight. We obviously heard from them a couple of days ago when they lowered growth forecasts for the rest of this year and next. Overnight, we've heard from them raising concerns about the Eurozone, saying they still pose a big threat to the global economy, saying that the Eurozone could push the global economy into recession again next year if they don't start to pick up a bit. We've obviously seen they do take a long time to make decisions, to make changes in the area. We've seen the IMF say that they've got concerns over a lack of decisive action in the Eurozone. So we are going to have to start seeing changes here. We are seeing it again, obviously, with Spain. They are taking the time of requesting a bailout. We've got the finance minister now coming out and saying that they don't actually need a bailout at the moment. So again, we are just seeing them take the time over these decisions which are going to lead to the markets losing confidence in them. And we have seen repeatedly over the last few years that it takes a lot quicker. It takes a lot less time for the markets to lose confidence in the Eurozone than it does for them to regain it. So we really do need to get to a point where we're not waiting for the markets to lose confidence in the Eurozone before they start to make these before they start to make these big decisions. But we're not actually seeing it yet. So the IMF are warning that they do still pose a big threat. If we look at the charts now, we can see sterling's trading around 160. It's trading slightly higher today. We have seen it make substantial losses over the last few days since it broke below that ascending triangle. It did find support here around 160. It's going to be a key support level. If we see it break below here, we could see significant losses here over the next few days. However, I actually expect to see it maybe make a move back towards the bottom of this descending triangle, but to the bottom of this ascending triangle, potentially testing the support line, testing the previous support line as a resistance area. If we look at the dollar Swiss charts now, we can actually see it's trading around spot 0.94. Now it has broken above this descending channel it has been trading in recently, and also above this 200-day moving average. It's trading above here today and has found support already from here this morning. Now again, this suggests we are going to see a substantial move higher for the dollar against the Swiss franc. Obviously not only breaking above this descending channel which has been trading in for a while now, but also above that key 200-day moving average. So we are likely to see this act as a support level. It may come back and retest it again, but if it does hold above here and use the 200-day moving average as a support level, we could see a substantial move higher. From here, we're going to look at the euro charts. Now, as we know, both these charts, the dollar Swiss and the euro dollar, are very much inversely correlated. Now, the reason I say that is if you look at it, it's currently trading around 128.66. It is currently finding support from this 200-day moving average. Now, on the previous chart, we actually saw the dollar actually break above this 200-day moving average. And if that actually prompts a significant move higher, what we could actually see is it pushes the euro lower in these euro dollar charts, potentially breaking below this 200-day moving average and sparking a substantial move lower. So it's going to be interesting to see how the move on the dollar Swiss charts actually does impact the move on this euro dollar. Looking ahead to the US this afternoon, we're expecting to see the S&P open up 2 points down, the Nasdaq is expected to open 5 points down, and the Dow is expected to open down by around 17 points. Thank you very much for listening. My name's Craig Earl, market analyst at ALPARI UK.